You know, the pharma giant Novo Nordisk has been on an absolutely incredible run lately. But some major news just dropped and it sent shockwaves through the market. So what happened and what does it mean for the company's future? Well, let's break it down using a fresh analyst report from Morningstar.
Okay, so it all kicks off with this bombshell news. Let's say it's November 24th, 2025. Novo Nordisk drops an announcement its massive Phase 3 trial for an Alzheimer's drug has failed. As the analyst says right here, this was a huge, high-risk, high-reward strategy. It was a total swing for the fences, and they missed. Big time.
And the market's reaction? Oh, it was swift and it was brutal. By the time the market closed in Copenhagen, shares had tanked by 6%. That one number tells you everything you need to know about how much was riding on this trial, and it really sets the stage for some serious questions about where the company goes from here.
So, why does one failed trial matter so much? To get why, you really have to understand the empire Novo has built. I mean, their whole modern success story, it's pretty much built on a single, groundbreaking molecule.
Now look, Novo Nordisk is no flash in the pan. They've been a major player in diabetes for almost a century. But lately, this new class of drugs, you've probably heard of them, GLP-1s, well, they've turned Novo from just a steady leader into an absolute titan.
I mean, just look at their power. The company controls over a third of the entire global diabetes market. That is a huge footprint in an industry that's worth, what, over $80 billion? It's massive. And right at the heart of all this dominance is that one molecule I mentioned, semaglutide. You've definitely heard of its brand names, right? We're talking Ozempic for diabetes, Wegovy for obesity, and Rybelsus, which is the daily pill version. This trio is the engine driving pretty much all of the company's recent growth.
And this chart, wow, it really shows you just how dramatic that shift has been. Insulin, which was their foundation for decades, is now less than 20% of sales. Meanwhile, these GLP-1 drugs, led by that powerful trio, make up almost 3/4 of their entire business. And that is exactly why a trial failure for a drug based on that same molecule is such a massive deal.
Okay, so with all that in mind, let's dig into the arguments against Novo Nordisk. This is what investors call the bear case. Because this Alzheimer's failure, it's not happening in a vacuum. It's really part of a larger pattern of pressure that's been building on the company.
Yeah, the analyst is quick to point out that this setback isn't some isolated incident. It's coming on the heels of other recent disappointments in their drug pipeline. It's yet another blow, and it basically closes off one more potential path for the company to get its mojo back.
And let's be honest, the biggest pressure of all, it's coming from their arch-rival, Eli Lilly. You see, Novo's Wegovy was a game changer, for sure, but it was hit with all sorts of supply problems. Then Eli Lilly comes into the ring with Zepbound, a drug the analysts flat out calls superior, and it has been aggressively stealing market share ever since.
So you see, the crucial point here is that this isn't just a one-on-one fight. You've got them losing share to Lilly. You've got them fighting off these cheaper, unbranded, compounded drugs, the custom mix versions. They're also dealing with their own pipeline stumbles. And all of this is happening while they're under intense pricing pressure, especially in that super important US market. It's a lot.
Okay, so that sounds pretty grim, right? But that's only one side of the coin. Let's flip it over and look at the bull case, the argument for Novo, which, trust me, paints a very different picture.
The whole bull case really hinges on this one key idea, a wide economic moat. So what is that? Well, in investor speak, it means a company has such powerful, long-lasting advantages that it can fight off competitors and protect its profits for 20 years or more. Think of it like a fortress protecting a castle.
Okay, so where does Novo get this moat? According to the analyst, it comes from two main things. First up, you've got what are called intangible assets. We're talking about their patents on those blockbuster drugs, which are locked down until 2032. And second, their huge, super efficient manufacturing operation, which is really, really hard for anyone else to copy.
So this moat gives them a pretty clear playbook for what to do next. Step 1, just keep growing sales of Ozempic and Wegovy. Maximize them. Step 2, and this is the big one, launch that new high-dose oral version of semaglutide for obesity. And step 3, start expanding into new diseases like MASH. That's a really severe type of fatty liver disease.
And the analysts really can't stress this enough. So much is riding on this next launch. Think about it. A really good pill version could be a total game changer. It could sidestep all those supply problems they had with the injections, and because it's more complex, it would be way harder for those compounding pharmacies to copy. This is their next huge bet.
All right, so we've got the bear case with all that pressure, and we've got the bull case with its powerful economic moat. So how does the analyst weigh all this out? What's the final verdict? And this is where it gets really interesting, because despite that big stock drop, despite the awful news about the Alzheimer's trial, the analyst is not changing their fair value estimate for the company at all, which makes you wonder, how is that even possible? Well, here's the thinking behind it. The analyst basically went into this knowing it was a long shot. In fact, their model only gave the drug a 40% chance of success in the first place. So yeah, the failure pulls about $1 billion in potential sales out of their model, but it doesn't even touch the core business. And that core business, it's still projected to hit a staggering $39 billion in sales by 2030.
So it all boils down to these numbers right here. After that big drop, the stock was trading around $47. But the analyst's fair value estimate, that's what they think the company is actually worth, is way up at $66. What that means is the stock is trading at only about 72% of what the analyst thinks it's worth, and that leads to the final rating, undervalued.
So that leaves us with the big question, right? That high-risk, high-reward moonshot for Alzheimer's, it's off the table. Now, all eyes are on its core market and that absolutely critical launch of the oral drug. Is that going to be enough to hold off the relentless pressure from Eli Lilly and prove the bulls right? That's the multi-billion-dollar question hanging over everything.